In this video, I'm talking about the pros and cons of a Roth 401k and key differences and tax implications you need to be aware of. When it comes to planning for retirement, choosing the right savings vehicle can make a significant impact on your financial future. And traditionally, 401k plans have offered tax-deferred contributions, but in recent years, the Roth 401k has emerged as an appealing alternative. With its unique tax advantages and considerations, understanding the key differences between a traditional 401k and a Roth 401k is essential for making informed decisions about your retirement savings strategy. Both traditional 401ks and Roth 401ks have their pros and cons, and the choice depends on your own unique financial situation and retirement goals. Keep watching for the key differences between a traditional 401k and a Roth 401k and the tax advantages and disadvantages of each. Let's start with traditional 401ks, pros and cons. With a traditional 401k, you can contribute a portion of your pre-tax income into the account, reducing your taxable income for the year. This means you don't pay taxes on the contributions at the time of investment, but you will later be taxed on both the contributions and earnings when you withdraw the money during retirement. The idea behind this is that you will likely be in a lower tax bracket during retirement, so the taxes you pay then may be lower than what you would have paid when you made the contributions. So let's talk about the pros. First is there's immediate tax benefits. Reducing your taxable income means you can lower your overall tax bill in the present. You also have potential for higher contributions. Since you contribute pre-tax dollars, you effectively have more money to invest up front. Now let's talk about potential tax diversification. Having a mix of taxable and tax-deferred retirement accounts can provide flexibility when it comes to managing your tax liability during your retirement. Now let's switch gears and talk about some of the cons. First is taxable withdrawals. When you start withdrawing funds during retirement, you need to pay taxes on both the contributions and the earnings, and they are subject to ordinary income tax rates. There's also the uncertainty about future tax rates. It's challenging to predict what tax rates will be in the future, and they could potentially increase, resulting in higher taxes on your retirement income. Also, required minimum distributions. Once you reach age 73, you must start taking RMDs, which can increase your taxable income and potentially push you into a higher income tax bracket. Do yourself a favor, check the description box below for a complimentary read how RMD changes protect your retirement savings. Now let's talk about Roth 401k pros and cons. With a Roth 401k, you contribute after-tax dollars into your account, which means you don't get an immediate tax benefit. However, the withdrawals you make during retirement are tax-free, including both the contributions and any earnings. So here's some pros. Tax-free withdrawals. One of the significant advantages of a Roth 401k is that all withdrawals made during retirement are tax-free, including contributions and earnings. This can provide significant savings if you expect to be in higher tax bracket during retirement or if tax rates increase in the future. Also, there's no RMDs. Starting in 2024, the Roth 401k option will now be exempt from RMDs, just like it is for Roth IRA. So you'll no longer have to roll your Roth 401k into a Roth IRA to stop the required minimum distribution rule. You also have flexibility in retirement. Since you've already paid taxes on contributions, you can withdraw both the contributions and earnings without tax consequences, as long as you've had the account for at least 5 years and are over the age 59 and a half. Now let's go over some of the cons. There's no immediate tax benefit. Since Roth contributions are made with after-tax dollars, you won't see an immediate reduction in taxable income or a decrease in your current tax bill. If you have an employee match, the matched money is treated like a traditional 401k and it goes in pre-tax. Also, you'll have lower contribution limits for higher earners. If you earn a high income, you may be subject to contribution limitations for Roth 401k, and this can limit your ability to maximize your retirement savings. So you're probably asking yourself, is a Roth 401k right for you? It's important to understand you can participate in both a traditional and Roth 401k plan, and it doesn't have to be one or the other. The only rule to keep in mind is that you cannot exceed contribution limits. Also, not every plan offers the Roth provision, so you will need to contact your plan provider to see if they allow the Roth. And if your plan does offer the Roth option, it's critical to consider factors such as your current and future tax brackets, retirement goals, and income levels to determine which option aligns best with your financial objectives before you make a move. We recommend that you consult with a financial advisor because they can provide personalized guidance and help you make informed decisions that suit your long-term needs. Before we finish, I'd like to talk about the maneuver difference. Every day, we talk to investors just like you, many of whom feel they have no control over their retirement success or are frustrated by industry jargon and financial advisors. We believe you deserve better, which means we're bringing common sense back to 401k investing. 401k Maneuver provides independent, professional account management to help employees just like you grow and protect their 401k accounts. And our whole goal is to increase your account performance over time, manage downside risk to minimize losses, and reduce fees that are hurting your retirement account performance. While we manage your 401k for you, we are not a robo-advisor. Far from it. We review and rebalance your account for you with the goal in mind of keeping you in what is working and out of what is not. Here's the best part. There's no in-person meetings required, and you don't have to move your 401k. Leave it right where it is, and we can handle the rest. Book a complimentary 15-minute 401k strategy session with one of our advisors to see how we can help you have a brighter retirement future. Check the description box below for the link to book a call.